Welcome everybody to Wall Street Reporter's next Super Stock live stream, September 21st. We are back with XTM and the CEO, Marilyn Schaffer. Marilyn, welcome back.
Thanks, Jack. Good to be back.
Marilyn, it's been an exciting summer. I mean, I know a lot of people were on vacation this year, but XTM has been busy at work. We've been seeing in terms of the news flow. The company is making constant progress. There's been some significant traction that you're making in the fintech space, and I want to share actually some examples of, like, I'm actually seeing real market demand for your services, which I'll get into it in a little bit. But first, for anybody that's new to the show or to XTM, quick snapshot. What needs are you solving in the market for your customers in the business model?
So that's what we do, Jack, is we provide earned wages and gratuities to hospitality staff, and now new verticals that we're really happy to announce, via a digital payment platform. So that's, in its simplest form, that's what we do. So, it sounds like maybe that would be an easy thing for companies to do, for example, via payroll. It's not so much, because when you're looking at measuring time and attendance in daily increments, that is a complex value proposition, and gratuities on daily increments. And why that's important to the market is retention, recruitment, employee satisfaction, improved time and attendance. These are all proven ways to get people to come to work and be happy about being at work.
Yeah, these are, it sounds like, these are huge things. I know it almost, when you just rattle it off like these, it sounds like, oh, these are huge things, especially again in the service business. Without the staff, you have no business. And basically the big thing is how you pay them, how they can get their tips and everything else same day. So the bottom line is, again, and I've mentioned it before, I think we've talked about it, I think it's really important for investors to, I don't think investors understand how big of a deal it is, what you're doing and the opportunity, because essentially, like right now, everybody understands that, we're in a very tough labor market. It's difficult to get staff for service industries or anything right now. And you have inflation in the market, which is affecting people. And what you're essentially doing is you're allowing staff at service into different service verticals, because you're expanding beyond just restaurants.
Yeah,
you're going far beyond that now, and so they can get paid in same day, and also the whole get their gratuities same day. And I think we'll talk more about some of the different features, like the tip pooling. Here's the thing. I think what I think is the real proof of the value of what you're doing and the market opportunities. Well, let's talk about the traction, because that's the thing. Let's forget about this. Let's talk about real dollars right now. Let's talk about some of the big wins you've had and why these companies are turning to XTM as this payment solution.
Okay, happy to talk about that. And I'm going to preface this with, I know there's a lot of frustration in our shareholder base about the US market, and I'm going to address that, but let's just talk about our successes. So in the last quarter alone, we added more than 220 new doors. That's a lot over 3 months for a company our size. Our GDV has increased over 400% year over year. So, we are growing. There's a tremendous amount of traction. And like any great company, any scrappy entrepreneurial company like ours, it's growing significantly, but we still have that mentality where we will bob and weave and we will not lose at all. When faced with delays like we have been in the US market, because the banks don't move as fast as we do, and there's a nuance that we need to add to our value proposition to really be able to compete significantly in the US. So as we await all of those different regulatory bodies to approve this and that, and we have lawyers engaged and compliance officers engaged, we said, what is in our backyard? Our backyard in Canada, we have tremendous amount of opportunity, and that's what we've been going after. We announced Foodtastic with 21 brands and over 700 different restaurants. You know, and again, back to the new verticals, one in the delivery space, which opens up a whole new avenue for us. We've been busy. There was no vacations for XTM this summer.
By the way, just so people understand, like, okay, so in terms of real dollars, right now, I mean, in the last quarter, I'm just looking at some numbers. You had when you say GDV for anybody that's new, essentially, so the gross dollar value, you had $117 million flowing through the system.
Yes.
Okay, so which is significant. Now these are big numbers. Also the and I think what is it? It's a which was a 400% increase from from the same quarter of last year.
That's correct.
Okay.
Yeah, and when you talk about 100 million, that's just in a quarter, right? So
yeah.
Yeah.
So the company is on track. I mean, again, there's massive quarter-over-quarter growth, right? You know, the revenues are increasing. I think 200+%.
Yep.
Over this last quarter over the previous year. I mean, these are the types of numbers that, you know, in a normal market, you know, and again, you know, fintech stock, tech stocks have been decimated, but in a normal market, this is the type of thing that, you know, sends stocks, you know, skyrocket. This is the stuff that people look for in a, you know, fintech, in a tech store. They want those massive quarter-over-quarter growth numbers, you know, which is what everybody's looking for. They want that unicorn potential where something could become, you know, $1 billion plus business. And again, you're essentially, I think you have the model in place, and we're seeing proof of that, because again, this what is it, Foodtastic? This is just the latest deal, and again, you're signing more and more deals, and people need to realize also that I think XTM is a relatively small company. I mean, how many staff do you have right now?
We're around 40.
Okay, so that's a tiny company in compared to some of these, you know, VC-backed fintech companies that have hundreds of employees. I mean, they're burning, you know, tremendous amounts of money, and, you know, to get the same type of traction. So this company, Foodtastic, you signed, they have 700 restaurants in their system, something like that.
Yeah. They have 712 locations and 21 different brands. So we've already, you know, rolled out we're rolling out Milestones and others in that group. And again, that makes the point of sale integrations really important. Maybe I can just explain why to you, Jack. When you go into a restaurant and you pay your check, your bill with your credit card, they usually hand you a terminal. That terminal represents a point of sale platform that particular business chooses to use. Well, we're integrated right there. So, I mean, we've been able to operate even without those integrations, but as we become more and more sophisticated and create less and less of a touch point for all of these different operators, that integration becomes completely seamless for them. But it takes a bit of work for us. So we've been knocking off all these integrations. That's partly what we've been doing this summer, is to prepare for exponential scale.
Okay, so again, I think, you know, because you're in the business, I don't think you understand, because the stuff is it's very complicated, very significant, and also when you get these integrations, it adds a lot of value. I don't think, you know, look, when you're dealing with a lot of, you know, retail investors, or some maybe institutional investors, maybe they understand, but how difficult is it? I think I was asking you before, you know, how challenging is this for somebody to get all these integrations, to create this infrastructure that you have, which again, you know, you've created this infrastructure which could become potentially, you know, a multi-billion-dollar business. I mean, again, we're seeing 100 million flow through the pipeline in a quarter. So, I mean, you're creating that. How difficult is it for somebody to, let's say, how difficult would it be for somebody to copy what you're doing? Is this something that anybody can copy? Do you have a moat? How significant is this?
You know what I would compare it to, Jack, is, you know, you jump on a train. Not many people use train as a means of transportation these days, but if you did, or a subway, you don't think about that infrastructure. You just get on it and you sail across the city or across the country, and you enjoy yourself, have a drink or eat your snack, whatever it is that you do, read your newspaper. But think about the kind of work that went into creating that, breaking through rocks and mountains and creating the rails, and then the cars to go on the rails, and then running those cars. That's what we've been through. we've created this robust platform that's taken millions of dollars and millions of hours of very sophisticated engineers all here on-site employees of XTM to build this robust infrastructure, then to be able to manage it and be able to support the customer experience, and then to improve the customer experience, which we just announced with a new rebrand and a new refreshed app. We do all of this at our expense and to the delight of the user. And again, we do that all in-house. So the barrier of entry is massive. It's years in the making, and it's millions and millions of dollars to get to where we are today, to be able to take on the capacity that we do, and that we will.
Okay, so right now, so right now, just for, how many shares are outstanding, like fully diluted?
I believe there's around 170 million.
Okay, so roughly, so the market cap is then roughly, what are we talking about?
I think the market cap right now is somewhere around 30 million Canadian.
Okay, so 20 million, 25 million US, right?
Right.
So basically, the market is saying that the company is worth $25 million, right? Now, for an incumbent in the fintech space, let's say it's a, I don't know, I'm trying to think, ADP, Pay, whatever it is, anybody who wants to be, for them to do what you're doing, how much would it cost? Because also, here's the thing people don't appreciate. For an incumbent, it's a lot more difficult. It's a lot more, it's much more complicated. How much would it cost them? How much time would it take for somebody to, let's say, to replicate what you're doing?
Well, listen, if you throw, enough money at something, you can usually get things done.
You go to the moon, you can go to Mars.
You can go to the moon, it's true. But I think what we've done is we've, so is it replicable? Yes, it is, for sure, especially if you took an ADP, for example.
Anything is, yeah.
But if you look at the way we've treated the market and the way we've treated this industry and the bespoke approach we've taken to the services business, there's a lot of catching up to do. And I'm sure there's people out there trying to figure it out, but we're engaged. We have great rapport with our clients. We provide excellent customer service. And that part, if you take the sum of the parts, it's greater than the whole. It would be very hard to step into our shoes.
Yeah, because the way I look, again, for anybody that's tuning in for the first time, the goal with our next Super Stock program is to, introduce companies that have that 10x to 100x upside. The companies going after massive multi-billion-dollar opportunities, key inflection point, multiple catalysts. I go into all that, but one of the other things that I look for when I look for a company, that qualifies to be on the platform is I want something which has kind of it's already undervalued intrinsically. There's like a built-in profit upside. So in other words, the way I'm looking at XTM is essentially there's a built-in profit, because for somebody to, let's say, replicate what you're doing, for a big incumbent, I mean, it's much cheaper for them, let's say, to just write a check for like $150, $200 million. So that gives an investor essentially a 4x, 5x upside that's built in. Because I mean, the value of what you have between the existing customer relationships, so the infrastructure, it's much cheaper for somebody to just write a check. Now, I don't think, is it fair to say that you wouldn't sell a company for under 150 million? But it's like that's why I'm looking at this as there's like a built-in profit for investors. Again, I'm not making any price projections. I'm not saying it's just for the fundamentals.
We hold dearly the shareholders that got us to where we are today, and I live every day, every working day, including Saturdays and Sundays. I hold that responsibility to shareholders as a very serious responsibility to get the maximum ROI that is possible. So that's what we work for every day, is the value, the shareholder value. And to that end, I loved an Instagram post that came up last night from someone on our team, and they showed four corners. We're on every corner. There's 4 restaurants, 4 corners. They're all, today users. So, this is what makes me really excited. And once you have that kind of credibility, and you've got the space going, okay, these guys are contenders, we trust them, Then the business, like a tremendous amount of business comes in through our website without us having to pick up the phone. And as that increases, the group that we have right now, the 30-ish people, 30 to 40 people we have, I should check that. I think on our stand-up, which we have every morning, I think this morning was north of 35, so call it 40. We could handle 10 times the business. With a couple maybe of little nuances and exceptions, we have that infrastructure in place now. Now we're ready to go. And so there's a couple things that are not on hold, but that we anticipate, and that's a final approval to get to maximize the business that we have in the US. We have signed a number of new clients. I'm getting lots of queries. Can you name those clients? That's not within our control. To be able to name those clients is not within our control. And this group might be asking too, you've signed 220 new doors in the past quarter. Why aren't you naming them? It's becoming more and more of a competitive edge for restaurant operators to bring us on and to help us in the back end. We're saving them thousands and thousands of dollars in resources and time and energy and fraud and human error. And so they like to keep us in their back pocket. We can't force them to allow us to announce it. We do include it in our contracts. We ask for permission to market. And some of the larger groups, they strike it because they say, no, give us a year. So when we see that this traction is all bubbling up, all of this is happening. And, we're very excited about what the next 6 to 8 months are going to bring.
Yeah, so it's interesting because here's the thing. There's I'm trying to think the guy's name. I'm trying to think. There's a venture capital guy. I think he was the president or the chief operating officer of PayPal, right? So this is the guy.
Yeah.
I forgot his name.
Andreessen. Yeah.
No. Okay, it'll come to me after we're done.
Okay.
Probably. Anyway, so he's a VC now. He's runs billions of dollars. But anyway, so he had something very interesting. There's a video on YouTube where he says, okay, what is the model? How do you create a $1 billion startup? There's a process. So what are the things you need, right? So obviously you got to have something which addresses some real pain points in the market, which is very obvious for people. So in the restaurant, in the services industry, what you're doing is you're solving a very obvious problem for them, and we can go into more details, but it's a significant operational thing, and it gives them a major advantage. So that's number one. But number two is in terms of the market, right? So we can talk about, fintech, multi-billion-dollar market, great, okay. But the key is you start with a certain vertical, you start with a niche, you dominate that niche, and then you can expand, which is what you're doing. You're really building a significant position in the restaurant space, right? And there you can get a lot of word of mouth. It's you talk about it a couple times, where it's one of those businesses where it's a little more I don't want to say everybody knows each other, but it's one of those businesses. And from there you can expand to other things. It's just like any of these huge success stories. They started with Facebook. Okay, Facebook started with college students only, right? It was a very specific thing, and then it became for everybody. So now you're starting with the restaurants. Now you're going to services, and then it's going to other. It could go pretty much. So here's the other thing, right? So here's the key thing, because it could go. I mean, in theory, you can serve any business, right? I mean, you can make this instant.
That's right.
For anybody, right? So that becomes an interesting thing. Now, that Adobe just bought, or they're about to buy, a company called Figma for $20 billion, right? Mm-hmm. This is a company that didn't exist. I don't know. Basically 4 years ago, they really started going, right? So $20 billion. Why are they paying $20 billion for this company? Because Figma is doing something which, in theory, Adobe realized could cannibalize their business. So they're saying, hey, you know what? Let's pay $20 billion. It's about 10% of our market cap, but it takes that existential risk off the table.
Right.
So I'm looking at it this way, right? So for a company like, I don't know, ADP, anybody in the payments, in the payroll, whatever it is, if once they see you get some more traction, this could be in 6 months, 9 months, whatever it is, 12 months from now, okay? Then they say, wow, these guys, let's buy them before, right now they're in some verticals. They're doing restaurants, they're doing services. Let's buy these guys before maybe they might go into every business. I mean, in theory, you could serve every
For
business.
sure, and we would entertain all those conversations.
Right. I'm not saying that, the company's for sale, for $1 billion,
No.
whatever. But it could be. Why can't it be $1 billion? If Figma was bought for 20 billion, why not? Right? I mean, this is a simple business.
And we live every day. We live every day with that kind of goal. Like, we're not satisfied with average. We're satisfied with the moon. And so I like where you're going with that. I think that's exactly right. When you talk about the different verticals, there's all these adjacent businesses, right?
Jason, that's the word I'm looking for. Yes.
That hit hospitality. But if you think about what happens when you sit down for a meal, the plates, the napkins, the tablecloths, all of those get delivered. They get sent out to laundry. There's all these ancillary workers that that need to get paid. And how much more so are they going to be incentivized if they can get paid every day? So this is what we're looking at. And it can triple, quadruple, 10 times our growth in a very short period of time. The good news is we have the infrastructure to be able to support it. And that is not a small thing. That's a big thing. It's what we work really, really hard at. And now we're at the stage where we're looking at, adding more of a sales team, especially as it relates to the US market, to really get our message out there.
Marilyn, I'm gonna get into the audience questions in just a second. We've got some great questions because this is the whole idea. I just wanted to kind of make one final comment before we go into the questions. Is that, look, I'm seeing kind of the demand for your this what you're doing everywhere. For example, right now, anytime I go in, pay for anything, on the terminal. You're paying, and then there's a gratuity. What about it's not even 15%. Some of these places 20%. They don't even have the 15%. In the U.S., I don't know what it is in Canada, but automatically every place has this. I mean, every business, not even store. I mean, it's crazy, right? So what that means is a lot of these people, they want to pay their staff working there daily, and they want to give them their tips daily. That helps them recruit people. And again, the whole inflation thing right now, we're going into this kind of very recessionary stagflation, whatever economy, whatever you want to call it. But what that means is people do need to get paid that day, because look, they got to put gas in their car, they got to feed their family. There's a lot of people who need that money today. They can't wait 2 weeks. Yeah. Right? It's a major advantage. If you're running a restaurant, you need to have 100 people, and for even not a bigger. You got to pay those. If they get paid every day, they're going to show up, right? I mean, it's really hard. A lot of restaurants, they all have signs. We're hiring.
Yeah.
And how much easier is it for these guys to hire somebody to say, hey, you start today, you get paid today, you get your tips today, pooling, you get everything today.
And Jack, think too of a staffing agency that maybe is for blue collar workers, and think about the competition to get those folks to show up and to work, through the project for 10 days straight. All of this becomes a competitive advantage to recruit, retain, and excite those workers, and make those workers feel like they are being financially included, that they have something to work for, goals. Our app is so robust. We've got areas to save money, to track the way you're spending money. Our mobile wallet rivals any bank. Any banking type of experience, and it's free. There's no monthly fees. There's no transaction fees other than moving the money off of the wallet. That's the only thing we charge for. So there's huge advantages to the worker and to the employer.
By the way, one interesting story. So last week I'm getting a haircut, and so this place I'm going to, I don't know, 10 years. It used to be $18 for a haircut. Now it's like $30, right? That's here. I don't know why they're charging me more. But here's the thing. I didn't have cash on me. For whatever reason, I didn't have my cash. So, so I want to use a credit card, right? And and then they have a little sign there that says, okay, you can't pay tips with a credit card. Now, I don't know. Basically, you could pay for the thing, but the tip they can't put on the. I don't know why. Maybe you can explain. But so basically, I have to go out and get Why is that? So if imagine.
So the reason why is because that worker wants that access to that direct tip, and the employer wants to give that worker the direct tip. With our system, you're able to do that without cash. So we solve that. We would be able to, you would pay for your haircut, you would leave a nice robust tip because you're such a good guy, and that tip would go directly to the wallet of the person, the stylist who did your hair. And he or she would get a text message that says, you just received, $20 from Jack. I'm sure you're not going to give $20, but $10 from Jack. And so we solve that whole the direct tip problem for many businesses.
Obviously, it's a problem because this is a place that does, they have like, I don't know, they got like they must have like a dozen locations now in Midtown Manhattan, right? It's premium barbershop for anybody with a premium barbershop. They do a great job, right? So basically, and they have huge volume. I mean, they do a huge volume of business, I'm sure, right? Chairs are constantly full. So basically, they're and again, people now, they're not carrying cash anymore. People aren't using cash. So they really need to use your system essentially, because otherwise it's like too complicated. All right, they have to use. This is a perfect case for why this is such a big deal. Okay, let's get audience questions. The highlight of today. Okay, this is again the big question. Okay, the U.S. Oh, actually no, you're in the U.S. I guess he's asking when are you going to go massive in the U.S.? Is that
right? So we are in the U.S. We have a number of restaurant chains signed. We are to see the kind of volume and the kind of pop that we want in the US. As I mentioned, we have a nuance and a feature to add to our value proposition that is still in approval process. We expect it any day. We've been waiting for months. You can't move the banks any faster than they choose to move. So as I mentioned, we are operating in the US. We're fully operative. We've got a number of different restaurants on our platform in the US. But to see that pop, we really need this feature added. More to come on that, maybe even next week.
Okay, and also very important. I mean, you're also expanding into new verticals beyond. Can you mention some of the verticals you're going into now outside of just the restaurants?
Sure. So we announced a refuse deliver or pickup type of business. So where, say you're moving or you're cleaning, doing your spring cleaning or fall cleaning, and you call one of those businesses to come and pick up your junk, if you will, we signed their drivers. So we're paying. So someone's asking about trucking and driving. Absolutely. That's a big opportunity for us. And they love our platform and are advocates for our platform. We can't say their name, as per their request, but they said they will advocate for us in the industries, and they are doing that, and we're working on that vertical. Another vertical, as we mentioned, is staffing agencies. So more to come on that as well, but that just is a natural fit for what it is that we do, especially if you're working with transient or migrant workers who are, maybe taking on a job for a couple of weeks and then not being there and then coming back. Our solution makes a lot of sense for those workers.
Yeah, no, it's again, it's another one of those things like transportation. Like okay, this refuse pickup, whatever. I mean, that's an important thing, and those people are having a hard time, getting staff, right? I mean, without trucks, you have nothing, right? Without trucks bringing the food, bringing the, whatever. I mean, you basically the society basically shuts down. So you got these people need. It's a big deal. I don't think anybody can appreciate it because everybody's sitting in front of the computer and nobody knows how the real world really works. But as we've seen the last few years, when certain things break down, basically it creates a lot of supply chain problems, and all of a sudden it trickles down. Okay, I'm not sure if I understand this question. June. Okay, new customers. New customer. What did you? I think you mentioned new customers. New major customers you're bringing in.
Well, so we did announce in our Q2 that we signed 220 new doors or new locations. We can't name all of those, but we did name some of them, and there will be more bigger names to come. So yeah, and we talked about Foodtastic, and we talked about like within that one brand, there's 21 brands and 750 locations, I think it is. So that's a big one that we're tackling, and we're onboarding as we speak.
Okay. Laura's asking, when do you expect to have a positive EBITDA?
So our CFO is not here to address that. Our business is one that goes like, and I see there's a question about COGS as well. So our business is one. If you go back to the analogy of the rail and the cars and the train, there's an intense capital investment required upfront, and then we have minimums that we have to do with the banks, etc. But as your volume increases, your margin increases. So our margin right now is around 20. I think it's 20%, 19%. We see our margin getting better and better over time, and you can look at other models in the neobanking to be able to compare. So that's what I'll say about this right now. Is EBITDA positive is it's a ways away. I'm not going to pinpoint an actual date, and there's some things that could happen and some things that might not happen that would change that. But I will say we have a very healthy, robust, and our business has a lot of traction.
Yeah, I mean, the way I look at this, I mean, I don't really care, but I mean, this sounds sacrilegious, but look, when it comes to growth stocks, the EBITDA, that stuff does not matter. Right now, the company is in the growth stage, and the value of the infrastructure, you're basically buying the growth story here. The EBITDA story, by the time you get to the EBITDA positive, I mean, the stock could be significantly higher, and it's like you buy the rumor, sell the news. I mean, it's like by then, Marilyn, I don't want to say this, but by the time the company's EBITDA positive, you don't want to own the stock. The big growth is now.
Yes, you're right, Jack.
Now, when it gets to EBITDA positive, then the growth becomes. I mean, the stock value, the opportunity is much less. I mean, it's like
If I was an investor, and I am an investor,
I'm not giving you advice, by the way.
If I was an investor, and like I said, I am an investor because my personal future is tied up in XTM. I can't sell any shares. I don't sell any shares. What I would be looking at is management and the current progress to date, and what is the vision moving forward. And I think the rest, you have to kind of come for the ride. There's a lot of Monday morning quarterbacks. I get tons of emails from investors saying, why don't you do this? Why don't you do that? When are you going to do this? When are you going to do that? We're in the field. We're bobbing and weaving. We've got lots of really strong people, both in payments and in hospitality. And we are very proud of our success to date. And we continue to push forward. And we hope that we have more significant news for you in the very near future on the US. But right now, that we're not able to disclose that much about the US.
Let's wrap up final questions here. But again, the way I'm looking from the investor standpoint is, okay, you're basically paying $25 million for this company. That's the market cap right now, US. You're getting a business that's doing what? It's on track to do $400 million of gross dollar. The run rate is $100 million. So $400 million flowing through. That number is growing. I mean, 200% quarter over the previous quarter of last year. So I mean, that's a cheap price. I think for somebody in the payment space, they would be willing to pay at least $100-200 million for this business if it came to that. So it's like, to me, I look at that. That's kind of the put. That's the that's the put for the stock. I mean, it's like you have almost a built-in profit. Okay, audience question. Andrew, Philippe, always great questions here with the detailed financials. I'm running forecasts of future revenue generation. I'd love your comment on cost of goods sold management and your strategy to put upward pressure on operational margin.
Right, and I kind of addressed that. So, we do see margin getting better as our volume increases. We have a CFO who's rigorous on bottom line. Any additional expense that we can cut, we're cutting. Even though we are sitting on cash, we've got a good run rate. We're hoping that we get to a point where we can self-sustain in the near future. But when you ask me about, Klaus is asking about 2022 and 2023, we don't provide guidance, so I can't comment on what our revenue will be. I can only comment on what it has been. But in this type of business, I can say fairly that you do see margins improve as volume grows. So that's what we're focused on, is we're focused on volume, getting more and more people onto the cars, into the train. We're also focused on other revenue streams. So we've added tip pooling, which is a monthly reoccurring revenue, and we're ambitiously out there selling that to a market that really needs it. And the EWA is the earned wage access is another feature that we can further monetize that we are rolling out.
It's really, the incredible thing about the penny stock market, the public market, is that, you have, because these stocks get priced daily by the minute, right? The stock's trading every day, and you have retail investors, you have, and right now you have something that which is trading. I mean, if you were private right now, if you were a VC-backed company, in other words, if you were, getting money from Silicon Valley VCs, the company, based on what you have right now, would be valued at maybe, I think, 200 million. You'd be raising money at $200 million rounds. I mean, the company would be valued at 200 million plus easily.
We have groups, Jack, in the space with the same
it's an
number
arbitrage
of
opportunity.
users that are valued at $1 billion. So you're right. The public market has been particularly cruel to companies like ours, but the private market has been frothy. There's no doubt about it.
Okay, give us some examples, then we'll wrap up on that, because we're running a little bit. Give us some examples. Private comps very similar to what you're doing that are valued at,
Well, because they're private, you kind of can't guess, but you can. All you have to do is go to Crunchbase, for example, and look at some of the raises they've done, and look at the kind of percentage that they got for that raise, and you can see billion-dollar valuations for companies in the same genre.
It's an incredible opportunity. Okay, so last question, Marilyn. Okay, news flow. What can we expect? I mean, in terms of news flow, next couple of weeks.
Well, yeah, I tell people we don't want to waste our ammo over the summer because a lot of people were away, but we're very much working on news flow now, and excited about what's going to come out over the next, call it, quarter.
Okay. This is the last question. Okay. I haven't asked you this in a while, but I haven't asked a lot of companies in a while. I should start asking. Top 3 reasons, in your opinion, why investors, should consider XTM today.
Number one, I think we're in a huge growth trajectory. We have just nothing but upside in front of us. The hard work has been done. We believe the risk has been eliminated. If you look at our client base and the brands we represent right now. Number 2, we've got a management team who is incredibly responsible, and every single dollar that is invested in our company is spent with thought and integrity. And number 3 is that the world is changing, and we're at the right place at the right time. The same day pay, the elimination of cash, full compliance with employees as it relates to disseminating tips and gratuities, all of that. We have the right technology for the right time.
No, I mean, I couldn't say better. Okay. Marilyn, thank you again. We look forward to catching up with you
next few
weeks. Thank you again.